On the program today, AFDB begins its 55th annual general meeting today. IMF says central banks must be independent after change of Zambia's central bank governor. And Kenya's financial regulators warn citizens of fraudulent financial schemes. Hello and welcome. Thank you for joining us on Business Incorporated. I'm Chimeze Obi Iwagu. Let's get the show started now with the markets and investor sentiment here in Africa. We're mostly positive at intraday, except in South Africa, where the market declined 0.46%. In Nigeria, the main index was up marginally by 0.01%. Egypt's EGX 30 also rose at intraday by 0.12%, while Kenya closed positive on Monday. And in the Middle East, major markets there were mostly positive at intraday, except the Abu Dhabi index, which declined 0.25%, hurt by a 1% fall in the country's largest lender, First Abu Dhabi Bank. On the flip side, Dubai's main index jumped 1.03%. Elsewhere in the region, Saudi Arabia's benchmark index rose 0.20%, while the Qatari index rose 0.19%. And in Europe, stocks moved higher in the first hour of trading today, following upbeat trade in markets in the U.S. and Asia Pacific. Let's get more from Chelsea Dulani there, standing by at the Frankfurt Stock Exchange. Good afternoon, Chelsea. Thank you for joining us again. Well, European stocks are rallying for the second straight day on news that the U.S. and China have resumed trade talks. How likely is it that these talks will lead to breakthrough?
The odds of a breakthrough on China-U.S. trade tensions is still quite low. We've had a lot of back and forth over the past couple months. Just yesterday, President Trump was threatening to cut off all ties with China again. So there clearly are still deep issues between the two. And of course, we've seen these tensions impacting not just these trade negotiations, but really a number of issues from the sovereignty of Hong Kong to technology companies in the United States. So there are certainly deep issues, but it is quite encouraging to the markets and to investors to see that they are still committed to this phase one trade deal that they reached in January. The key part of that was that China agreed to buy about $200 billion worth of U.S. goods over the next 2 years. China has been really falling behind on that this year, in part because of the coronavirus pandemic. They just don't need as much oil and chemicals and things like that they had pledged to buy. But President Trump does seem to want to give them a little more time to get up to speed on that. These economies, despite all these tensions, remain very interlocked, and there's a lot of jobs, there's a lot of businesses that depend on trade between the two. So they still do have a lot of tensions, they do have a lot of issues to work out, but for now, the economic interest of keeping this trade deal intact, of keeping this relationship alive, seems to be winning out.
And Germany is reaching the limits of its coronavirus testing capacity as labs struggle with a flood of tests from people returning from international travel. What do public health authorities plan to do to ease the strain?
So we did hear from the health minister here in Germany that they basically now want to stop doing these tests at the airport. So they've only been doing this for a couple of weeks. The requirement to get tested if you're coming back from a high-risk area went into effect on August 8th here. And in just a matter of a few weeks, they've already really reached the limits of how many tests they can do. They're doing about 875,000 tests a week now. That's gone up quite a lot. And we are seeing the difficulties of that. There have been tests lost. There have been a lot of delays in getting test results. There's a huge backlog in tests. So it clearly isn't sustainable for Germany to keep up this level of testing. So the question really is what do they do instead? They don't want to completely shut down travel again. So instead of the testing, what the health minister has proposed is that people would, coming back from these high-risk areas, they would have to quarantine for 5 days and then then they could potentially get a test and return to public life. This is certainly causing a lot of concern among the airline industry here, which has already been hit so hard by the decline in travel. If people have to quarantine for 5 additional days, that might deter a lot of travel from these areas. So there's definitely a lot of criticism of this proposal, but it is expected to be discussed on Thursday by Chancellor Merkel. So we could be potentially looking at a decision later this week.
A new statistics released by the German government show that consumers and businesses drastically cut back on spending due to the pandemic in the second quarter. What does this mean for the economic recovery?
So it's not a surprise that in the second quarter, people were spending less money, businesses were investing less. For at least a month of this quarter, the economy was basically on lockdown, so people, weren't out shopping, people weren't at restaurants. But it is certainly a major concern for the recovery. Business investment in particular is a major driver of economic growth, and consumption, household spending also is very important for the economy. And if people in businesses are hesitant to spend, which they do appear to be at this point, that could certainly constrain the economic recovery that we've seen over the past 2 or 3 months. And at the same time, there is obviously the question hanging over Germany and the rest of the world now is how will the virus develop over the next several months? We've seen cases here in Germany rise to the highest levels since April. There's, of course, more talk of restrictions, of regional restrictions being put in place, and that also creates a bit of a headwind towards confidence and could make people more reluctant to spend money and ultimately deal a blow to the recovery that we're seeing.
All right, thank you, Chelsea, for updating us on those. Enjoy the rest of the day. And in the UK, retail employment has recorded the worst fall since financial crisis as COVID-19 takes toll. For this and other updates from London, here is Juliana. Hello, Juliana. Good afternoon again. Well, it's intraday trading. What is driving sentiment at this time? Is it still the U.S.-China trade hopes, the hope for coronavirus vaccine, or the retail employment data, which indicates the worst fall since the financial crisis?
I think it's a cocktail of all three of those stories that you just mentioned, Chimaze. And the FTSE has actually extended those gains that we saw at early trading. The all-share is up 0.17% at intraday. FTSE 100 is up by 0.20%, and the FTSE 250 is up by 0.07%. In currencies, the British pound is up on the US dollar by 0.46%. Up on the euro by 0.10% and up on the Japanese yen by 0.95%. It's worth talking about that CBI distributive trade survey that you just mentioned, showing that retail redundancies are at its worst rate since February 2009. The CBI, which represents about 190,000 businesses, surveyed about 68 retail establishments, and what they said is it's likely to get worse in September as the weather gets worse and people are not out shopping. And of course, as well, we've got to talk about that furlough scheme. I don't think I've been coming on this show without mentioning the government's furlough scheme, which will be coming to an end. And of course, once that does come to an end, we are expecting mass redundancies. It's also important to mention that there's also been a slight fall in retail sales of 0.6%. We'll wait to get the official data from retail sales. I believe they'll be coming out later this week. But there was an increase in retail sales in July. But this decline in August doesn't look great at all.
And the pharmaceutical group AstraZeneca has started a clinical trial of a drug to help prevent and treat COVID-19, with the first volunteers already receiving doses. Are the markets also moved by this?
It doesn't appear to be making major headlines, but it's certainly a big news story, and it's positive because we all know that everybody is racing to get a vaccine. However, this new drug isn't a vaccine. It's a combination of antibodies. So as you said, it will help treat people that have already had coronavirus and also help treat you if you are suffering with coronavirus symptoms. It is being made by AstraZeneca, the giant pharmaceutical company, who are already in in the works with Oxford University scientists to make a vaccine. It appears to be going very well. I believe there are about 48 patients who will be taking place in this clinical trial. And if it is to be a success, which fingers crossed everybody's hoping for, that before the end of the year, they will move on to a late stage 2 development.
And Virgin Atlantic creditors are to vote on a £1.2 billion COVID rescue deal. What is the possible outcome of this privately funded recapitalization plan?
Well, I suppose the negative outcome of this, if it doesn't get the green light today, is that before the end of the month, the embattled airline will run out of money. So by next week, they will stop flying. It's unlikely to happen, although never say never. We have seen some big companies fall during the COVID-19 pandemic, and it has been a real struggle for Sir Richard Branson, the British billionaire who has been up against it with Virgin Atlantic. We already saw in Australia that Virgin Australia was taken over. Here in the UK, he got his coronavirus loan rejected. And so basically what's happened here is they've raised this £1.2 billion. 170 million has come from Richard Branson himself. But what they need to do is they need to agree with shareholders that 20% of Virgin Atlantic will now be owned by 170 of the debtors. So the shareholders have to agree to that. Once that's agreed, if it's agreed within the next couple of hours, there'll be a further court hearing in the UK on September the 2nd. And on September the 3rd, there will also be a court procedure in the US where Virgin Atlantic is seeking some sort of a bankruptcy protection order so that any assets they're raising will be protected under US law.
Well, we'll sure follow through with that story. Enjoy the rest of the day, Juliana. And stocks in the Asia Pacific were mostly higher today, while top trade representatives from Washington and Beijing had a call to discuss the implementation of their Phase 1 agreement. South Korea stocks led gains among the region's major markets, with the Kospi rising 1.58%, while stocks in Japan also saw gains on the day, with the Nikkei 225 jumping 1.35% and the Topix index advanced 1.13%. Mainland Chinese stocks, on the other hand, were mixed by their close. The Shanghai Composite shed 0.36%, while the Shenzhen component was above the flat line. Hong Kong's Hang Seng Index edged 0.16% lower, while shares in Australia edged higher, with the S&P ASX 200 up 0.52%. And U.S. stock futures rose today after another record-setting session on Wall Street. Dow Jones Industrial Average Futures traded up 163 points, implying a positive open of around 143 points, while S&P 500 and Nasdaq 100 futures also traded slightly higher. And during regular trading, the S&P 500 climbed 1% and closed about 3,400 for the first time. And away from the markets and back here on the African continent, the African Development Bank Group 55th annual meeting began today and will run till August the 27th virtually for the first time in the bank's history, moving away from physical presence as part of measures to reduce the spread of COVID-19. According to the bank, this year's meeting will focus on closed statutory meetings of the governors of the institution, the efforts of the bank in responding to the global health crisis, and on the election of a president. The bank estimates that Africa could lose at least $173.1 billion in GDP in 2020 and $236.7 billion in 2021 as a result of the economic fallout of the pandemic, which has forced several industries to shut down and has led to millions of job losses. And the International Monetary Fund, in response to the change of Zambia's central bank governor, says the independence of central banks must be maintained. According to the IMF, without credible institutions and sound policies, sustained economic growth and much-needed improvements in living standards will not be possible. Zambian President Edgar Lungu on Saturday dismissed Central Bank Governor Denny Kaliale and replaced him with a former Deputy Finance Minister. We'll take a break, and when we come back, domestic commodities market update will be next. Do stay with us. The financial sector regulators in Kenya have warned the public of the re-emergence of fraudulent and unlicensed financial schemes seeking to take advantage of Kenyans during the COVID-19 period. In a joint statement, the Central Bank of Kenya, Capital Markets Authority and the Insurance Regulatory Authority asked Kenyans to be cautious of rogue entities which include online pyramid schemes, unlicensed credit and savings schemes, and unlicensed online forex bank brokers and traders. According to the regulators, some of the fraudulent entities have styled themselves as online global networking companies which seek to recruit members of the public to join and make cash deposits, purportedly to buy shares in the company. The regulators have vowed to take action against fraudulent and unlicensed financial entities in the country, even as they call on members of the public to blow the whistle on them. And on commodities market now, rising demand for ready-to-eat snacks and convenient foods have fueled the growth of the global nuts and seeds market. The nuts and seeds markets in the world is forecast to reach $81.46 billion in retail prices in 2024, increasing at a compound annual growth rate of 5.81% per annum for the period of 2019 to 2024. Well, joining me now to talk more about this is one of the research analysts with financial derivatives company, Nneka Okolo. Hello, Nneka. Good afternoon. Thank you for joining us.
Hello, good afternoon. Thanks for having me.
So the U.S. and global price of nuts, almonds in particular, have fallen by 40%. Walnuts are down about 18%, and cashew nuts have lost about 10% due to the lockdown. When do you expect a price rebound, and what will drive this?
Well, indeed, prices are currently pressured by, first of all, on one hand, a decline in demand as major sources of demand, such as airports, hotels, suburbs, and so on, were closed during the lockdown period, and some are still closed in certain countries up to now. While we have the decline in demand on one hand, on the other hand, we have positive prospects of supply, so a tentative surplus in supply. For example, the U.S., a major producer of almonds, has forecasted crop output of about 3 billion pounds for 2020. So the price decrease that we saw is as a result of a combination of lower demand and surplus of supply. And on this note, we'd expect the prices to recover when these sources of demand, when these demand outlets reopen, which might be not so far off, since, for example, Nigeria will be resuming international flights in August 29, and some other airports will be reopening in September, and generally economies have been gradually reopening.
Okay, now Nigeria is a cashew nut producer, and of course this is expected to be a major contributor to future non-oil export earnings. Now, will this heavy downturn be a threat to Nigeria's aspiration to diversify the economy from excessive oil dependence?
Yes, indeed, this downturn will in some way be a threat to Nigeria's plans to reduce its dependence on the oil sector. As Nigeria is, for one, the 6th major producer of cashew nuts globally, and cashew nuts is among the top 10 major traded agricultural produce in Nigeria. So in light of this, looking from the perspective of exports, although we saw exports to our major trading partner, Vietnam, cashew nut exports increased in Q1 2020 by about 22% in comparison to the Q4 2019 figure. In light of the fact that the lockdown restrictions majorly took effect in the second quarter of 2020, both in Nigeria and globally, we'd expect that revenues from cashew nuts would be somehow affected, and Q2 2020 export figures would not be so buoyant. Also, domestic demand must have been affected, given that following the closure of airports and hotels in the second quarter. So all this must have affected. All this must have affected Nigeria's. All this would have affected Nigeria's revenues from cashew nuts exports.
All right, Neka. Yeah, Neka, before, just a quick one before I let you go. With international and domestic airports, restaurants and hotels, reopening partially in the third quarter and, of course, fourth quarter, do you think we'll see a recovery in the demand for these nuts and a reduction in the high inventory levels? And if so, should Nigerian farmers begin to invest in increased cultivation and fertilizers ahead of the 2021 or when the economy may be, nearing pre-pandemic levels?
Of course, as airports, like I mentioned earlier, airports, hotels, and so on are major demand outlets for nuts in general. So the reopening of these places would definitely spur demand, and furthermore, given the currency devaluation that has occurred, our commodities would be cheaper in the international market. So we'd expect this to also drive demand for commodities, including nuts. So farmers can take advantage of this, investors can take advantage of this, and there are also other key commodities such as sesame seeds and cocoa seeds, which could also be taken advantage of as the economy continues to reopen.
All right, thank you very much for your time, Neka Okolu, research analyst with Financial Derivatives Company. Thank you for your time. And South Africans are bracing themselves for darker days that could go on for a year as its troubled power utility Eskom has resumed load shedding. The power utility said this was due to severe constraints in the power generation system. The country is getting some respite after power cuts last week due to the unavailability of 8 generation units. Let's watch this.
Our company, Eskom, generates more than 90% of the country's power supply, but has battled to meet demand for years because of faults at its coal-fired power stations, which have interrupted power supplies, hampered economic growth, and deterred investment. Eskom says breakdowns continue to weigh down on its fragile power system, and the grid is likely to remain under pressure.
Eskom's capacity to supply electricity is severely constrained because of the breakdowns we have had on some of our equipment. Over the past 10 to 15 days, we have lost about 10 generation units, which has now limited our ability to supply the country with electricity all of the time.
So power cuts are back again in South Africa. In 2019, the government assured the people that it would expedite procurement of new generation capacity when Eskom implemented some of the worst power cuts on record. Additional capacity has not yet been procured, and analysts believe that the worst is yet to come.
The fact that load shedding is here to stay, everybody must accept it. There may be temporary solution, this and that, but with the plants going down, it's not a clear path. So if we continue in this manner, Eskom may end up like other utilities in other African countries.
While the power utility is battling financially, it is owed over 30 billion rand by municipalities. The country's most famous township, Soweto, owes Eskom 18 billion rand, despite the company scrapping the township's debt twice in the past, with an agreement that customers will start paying.
We have, in the last few weeks, frozen bank accounts of the largest of the municipality that owes us the largest amount of money. Through a court order, we attached the movable property from another municipality in order to extract some payment from that municipality.
Eskom has also amassed more than 450 billion rand or $30 billion in debt, and isn't generating enough income to cover its costs, leaving it reliant on state bailouts to remain solvent. This led President Cyril Ramaphosa announcing in 2018 that Eskom will be split into 3 entities to improve efficiency. As if the COVID-19 lockdown regulations were not enough, manufacturing businesses are greatly affected by Eskom's load shedding, as they depend on power for the major part of their production.
So it's a whole lot of loss of production, loss of labor hours, and it all adds up to the cost of the product, because, if companies can't, they've got very small margins, and these things just add up to your actual cost, because for what would have taken you maybe a 4-hour or 8-hour job, now it takes you 16 hours, and you've got double labor, double machine time.
With the recent move to level 2 lockdown, businesses are expected to get back to life. But with the load shedding, many of these businesses may not even see the light of day just yet.
And with that, we draw the curtain on today's edition of the program. Thank you for watching. I'm Chimeze Obi Iwago.